Hello, traders. It is Thursday, the 19th of December, 2019. It's 8:02 a.m. Chicago time. Derivatives trading involves substantial risk of loss that is not suitable for all investors. Past performance is not necessarily indicative of future results. This is episode number 1661. Hopefully, you hear me nice and clear. This morning, really, the market is already on vacation, it seems. We're not seeing too much in the way of the market breaking one way or another. Just holding sideways. Really, the sentiment is still mixed. The Japanese yen leading the pack this morning, along with gold. Gold's trading at $1,480.20. Gold's in the February 2020 contract, and then it's followed by crude, which is only up 3 cents. The laggard today again is the DAX, the Euro stocks. Most of the indices, the risk assets, are down this morning. But, look at where we are overall. We're in this sideways pattern in the U.S. indices, really. As far as what's ahead of us, well, let's look at quickly what's behind us. What are the key releases overnight? The Bank of England released its interest rate decision at 7 Eastern. The expectation is 75 basis points, and they kept that right in play. And then we got initial claims at 8:30 Eastern about a half hour ago in the U.S. Came in at 234,000, higher than the forecast. And then we got Philly Fed at 0.3 versus a forecast of 9. And the current account, which just is hugely shows a huge deficit, 124.1 billion actual versus 122 billion expected. And then what's remaining is at 10 o'clock. At 10 o'clock Eastern, we get existing home sales expecting 0.8% there month on month. Inflation rate year on year this evening at 6:30 for Japan. GFK consumer confidence at 7:01 p.m. New York time, and then the China loan prime rate at 8:30 p.m. I want to make sure everybody knows that I will not be here tomorrow. That would be December 20th. I'm gone December 20th through the 25th. I'll be resuming on the 26th, but my guess is not much there won't be much to talk about, although we've had several years now of some pretty big moves right into the end of the year. So that's where we are. Let's take a look at what was expected yesterday versus what we actually got in our review segment. Yesterday's primary scenario is an open auction that really puts us sideways in the 3,200 area. I expected the market to push up into 3,203 and to consolidate there, pull back to 3,200 and potentially push. And the reason I expected a potential push here is because we had 2 days of balance, and we've got the potential for imbalance to follow. That did not happen. The secondary scenario is a push into 3,203 and then a rotation down to the bottom of the prior range, and then a potential retest of 3,200 before we start to move into the gap. And I was looking for 3,189 and a quarter there. Everything here happened up to about this point. The rest of this did not happen. The market really has no fuel in either direction behind it. Here's what actually happened. You were looking at, on the 2-tick Renko, we're looking at 2 days of action. This is really descriptive of how little we're getting in terms of rotations. This is why I like the Renko chart. It does not print a bar unless there's enough movement versus time. And so these last 3 days, you can see the value area right here, value area inside, and then value area just slightly outside, but all in line with the point of control right in this 3198 to 3200 area. And so that's where we stand. Like I said, we were expecting a test 3203 for both scenario 1 and 2. And then I was looking for it to test the low end of the range and then start to move lower on scenario 2, and it just did not want to do that. So partially the scenarios played out, but it's slim pickings. It looked pretty good on the short side yesterday, pretty early on, and then it made a higher low. The short basically set up right here for me. I'll show you just because there's not much to talk about today. Right here, we pushed up, couldn't get to 3203. We had somewhat of an impulse down, pulled back to mid, set up the mid area against 3200 for a short, rotated down to 3195, was looking for a test of the prior close and a test of the low. There were 3 levels here. Front run the prior close by 2 ticks. Prior close is 31.95, so front run it by 2 ticks at 95.50. Ends up pushing back to mid, which isn't too bad, and rotates back down to 96. Puts in a higher low by 2 ticks, and right here we can see that it's not a good thing for it to return and put in a local double top at that moment. So right there, we know that the short is likely not to work out. But as it pushed higher, as the rotations expanded on the upside up to this point, the rotation we're trading off of is the biggest one to the downside and biggest one for the day. And then we had an upward rotation that really expanded things and then pulls back to the mid area again. And then we finally get that push through the IB high for a range extension up. You would expect this push to pull back somewhere around the open and continue. It's not able to. It goes into the middle and gets into this chop. We know right there that it's just not got any dedication or conviction in either direction. So hands off at that point unless you're scalping. Here's what the overnight session looked like in terms of the order flow. Just chip chop. There's not much here. I mean, we'd have to really change the contrast quite a bit to see what's in there. We're not really trading anything significant. We need to keep paying attention to this 31.99 200 area, and then that's it. But below and above, there really isn't all that much. We'll see what happens today. We had 3 days now of coiling. Will it break? I mean, yesterday did not expect it to break. And it didn't. I expected somewhat of a push, but really nothing vertical. And today we come in and it's the same story, right? 3203, 3205. And then I have a little bit of, I'm looking for the measured move target at 7.5 on the upside. And then above there at 13, which happens to be a measured move, but also somebody's got that stacked for some time now. We could see the liquidity up there is pretty steady. And then below us, 31.89, which is the gap mid, is the next key area down that we need to pay attention to. So that's the lay of the land in terms of the order flow. Let's now shift gears a little bit and get back into what's expected for tomorrow. I'm going to keep the stock zones on here. The stock zone areas on the screen, it looks a little bit noisy, but it is what it is. One more time, I will not be here tomorrow, and I'll be gone through Christmas Day. I'll resume on the 26th. So I'll, after this broadcast, I will catch you then. Let's take a look at what's expected for today. Today, we're opening in range out of value. In this situation, in balance, the expectation is always for reversion. So I'm looking for it to revert back, retest this 3,200 area, the point of control. The point of control for this entire region. Let me extend this out, actually. So we can see that MC point of control kind of fluttering, but it's really at 31.99 and a quarter. Expecting the market to push back up there, expecting to see some resistance and for it to kind of roll over. The overnight session, which I didn't show, is mostly sideways with the overnight point of control on top of that MC point of control in the stock zone. And then I'm looking for it to start to release to the downside. And if it does accelerate, I'm looking for a small bounce here at 31.89 quarter and then a test of the 86. Again, I'm going to repeat this and I'll show you the market profile chart in a minute. If it gets back into below the 86, there's a good chance that we have a decent run down into 31.75. So if you're short into 86, it's really a good risk reward. Really good risk reward that the market is potentially going to yield potentially 3 points of heat for about 11 points of gain potentially. Anyway, there's always risk, so just account for that. Secondary, open beneath, test below first, poke a little bit below the yesterday's low and the overnight low, and then find buyers. Come back, consolidate at the 3,200, squeeze through, and then consolidate here for a potential push into the close back into 3,203 to 3,205. 3,205 potentially for today, giving us approximately 10 or 11 points of range if we're lucky. Okay, so that's what we've got for today. I'm going to skip right back to the review segment and pull up the overnight session. There's your overnight session. Really rough looking. It's just completely sideways, a Gaussian profile. Pretty good volume. And don't forget that this is expiration week. Tomorrow's quad witching Friday. Tomorrow, into the close today, we may see some delta hedging and some risk hedging before the expiration of a lot of contracts at the open tomorrow. So pay attention there. That's all I have for you. Good luck today. And I'll catch you the 26th, the morning of the 26th. Hope you've gained something from this broadcast this year. And I want to thank you all for listening in. And I wish you all a fantastic holiday. And if you're not around next week, I definitely, from the bottom of my heart, wish you just a tremendous 2020. Lots of prosperity. First and foremost, though, health. I wish everyone great health. Without health, we are nothing. And hopefully your potentials get fulfilled. Your potential gets fulfilled in 2020. Just keep at it. Mind your risk. Keep coming in, keep hammering away at those errors. Next year is the theme of next year is consistent improvement. Consistent improvement. Day to day, we're hammering on something to improve as traders, and that quest never ends. Doesn't matter how seasoned you are consistently going to be looking to improve. Good luck, everyone.